Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, professor of business at Chung-Ang University. Good afternoon, Professor Song. Thank you for coming on today.
Yeah, thank you for inviting me, and good afternoon to you.
Well, let's start with Wall Street. Overnight, all three of the main indices retreated. The more volatile tech stocks on the Nasdaq by more than 1.2%. Stocks did break a four-session winning streak, though, with investors concerned about Ukraine, the bond market, and so on. What's the story in the global markets?
Yeah, as for the from the data available in the Wall Street Journal, we have seen that the declining the composite index of Dow Jones and the S&P 500 and Nasdaq Composite index, also the Nikkei. But however, I have observed some kind of rebellion in the UK FTSE market. FTSE 100 has shown a positive 0.15 percentage point. But overall, I think the crude oil futures has indicated that there is a declining future price of the oil, so that may indicate the prospect of the economic growth is declining because of the extended war between Russia and Ukraine and the other problems associated with cannot be resolved sooner. That is the key issue that has prevailed at the world economy right now.
Well, here in Korea, stocks opened lower, but immediately rose into positive territory. A moderate gain in the end for both the KOSPI and the KOSDAQ. Outsized gains, though, for insurance, utilities, telecoms. Tell us about the domestic market, Professor.
Yeah, domestic market has shown because of the strong positive return in the KOSPI and the KOSDAQ, and so this is mainly due to the discounted overall stock price of the economy because of the risk in the war and extended coronavirus. The foreign investors had sold so many Korean stock in the stock market. Therefore, then the price has been overall declined. So I think the institutional investors, domestic institutional investors, believe that the current Korean market has been discounted too much and very cheap. So that's why this is a kind of some rebound of the market. It does not necessarily reflect some robustness or some positive prospect of the Korean economy right now. But because it's too much discount has been done, so that's why this is a kind of some base effect, I can say.
Well, looking at the economy broadly, some data from Statistics Korea. In February, Korea's overall industrial production was down by 0.2%.
Yeah.
Manufacturing saw production rise from the month before, but for services, it was another decline. Now, also, the composite index of leading indicators, which very broadly shows where the economy is heading, that was down for an 8th month in a row. Tell us about these data, Professor, and what you make of them.
Yeah, I believe that this reflects the overall economic situation is reflected in the Korean market also, and particularly because of the prospect of the economy is not good, and then because of the war and other factor supply bottleneck has increased. Particularly the oil price, energy price, LNG, and so that is because I believe that is mainly because of the price gouging by some oil importers or oil exporters from OPEC. So that is mainly has affected the Korea economy relatively big. That's why we have seen the overall declining of the business indicator and economic indicator. So what we are concerned right now is clearly because so foreign factors could affect the Korean economy a little bit severely, and because of the energy and the oil price problem. But overall, when the recess is expecting, then as the future crude oil future price has been declining right now, but does not necessarily beneficial to the Korean economy because of the bottleneck of the supply has not resolved yet, and then the conflict and the geopolitical problem has not settled down yet. So that is an ongoing concern. Yeah.
Right. And finally, Professor, the recent surge in the prices of oil and other commodities that you referenced that drove February's import price index up almost 30% compared to a year ago. That index has been higher each of the past 15 months, though. The increase is now getting smaller. Why is that, and what movement do you see in particular import items?
Yeah, mainly because of the supply bottleneck, and then the resultant the oil price increase had started in the January 21st, which has shown that year on year, the import price index, according to the Bank of Korea, has shown that some very high level of the growth rate of import price index. So it implies that actually the overall burden because of the import price that is driven by some energy price increase and some exchange rate fluctuation and the weakening Korean won against the U.S. dollar has been reflected. Then, but recently the growth rate, the import price index has been declined. So that may reflect some overall economy is the prospect of the economic growth is a little bit lower than anticipated. So that for the upcoming upcoming periods, we are going to see that this may not be resolved sooner or later. So that is my concern.
Well, we'll have to keep a close eye on that with your help, Professor. We'll have to leave it there for today, though. Thank you, as always, for coming on and sharing your insights with us. We appreciate it.
Yeah, thank you.